Welcome to the podcast. My name is Marianne Agudo, and you are here at Unpacked and Empowered Finances. This is where we break down the complexities of money and personal development into steps you can actually use. No judgment, no jargon, just real stories and strategies to help you own your financial future. Let's get into today's episode. Let me talk to you for a second, especially if you moved to Canada and you're building a new life. Maybe you're saving for your first home, managing bills, taking care of your kids. Let me ask you a question. If something happened to you tomorrow, would that plan still hold? I know these aren't easy questions to think about, but they're real. Because when you break it down, it's not just the income, it's the mortgage, it's the rent, everyday expenses, childcare, even the cost of replacing everything you do for your family. And in some cases, there can be taxes when assets are passed on. Now, in Canada, we do have some good support systems like the survivor benefits through the Canada Pension Plan. But in most real life situations, that alone isn't enough to fully support a family or maintain the same lifestyle. So think of life insurance as replacing that gap. It's not going to replace everything, certainly not going to replace you, but it's going to be a big help, a big one. At its core, life insurance is pretty simple. You pay a predictable amount called a premium, and in exchange, an insurance company agrees to pay a lump sum of money to your loved ones if something happens to you. So instead of your family carrying that financial risk, you're transferring it to the insurer. Now, one of the most common starting points is something called term insurance. Think of this as a protection for a specific season of your life, like while you're paying off mortgage or while your kids are dependent on you, and it's going to cover you for 10, 20, 30 years or maybe 40 years. If something happens during that time, the insurance company pays out. And if not, the coverage ends. And the reason why many people start here is because it's the most affordable way to get a larger amount of coverage. And it's also straightforward, it's budget friendly, and it does one job really well: it's the protection. Now, depending on the policy, most but not all term insurance also comes with a couple of important features. One of them is renewability. It just means that you can continue the coverage even after the initial term ends without having to go through medical eligibility again. The other one is called the conversion option, which allows you to convert part or all of the coverage into permanent insurance later on. So that is without needing another medical exam again. Now, it's important to understand how that works because renewal premiums are typically much higher, and that's not hidden at all. It's usually outlined in the contract or in the illustration in the beginning. So there are no surprises, but it does need to be planned for. So, for many people, this makes term insurance a practical way to start because you get the protection today at a lower cost while keeping options open for the future as your budget and goals evolve. Now, this isn't about choosing one option over the other like it's a competition. It's really about understanding what each tool does and how it fits your life. The other type is called permanent insurance. This is designed for needs that don't really go away. Things like final expenses, taxes when assets are passed on, leaving something behind for your family, or even a charitable donation to a cause that matters to you. It's built to last your entire life as long as the policy stays in force and as the premiums remain manageable for you long term. Now, you might hear something that's called cash value, and the simplest way to understand this is many of these policies are structured with level premiums. And because of that, you're paying more for the pure cost of insurance in the early years. So the company holds that difference in a reserve, and over time, that reserve grows into what we call the cash value. It's not the same as a regular investment account, but it's something you can access if needed, often through policy loans. Just keep in mind that it can reduce what's paid out to your family later if it's not paid. Something that's really important to understand is permanent insurance isn't just one type. It can be structured in different ways and it affects how it behaves over time. For example, whole life and universal life are both types of permanent insurance, but they work quite differently in how premiums, cash value, and flexibility are designed. At a high level, whole life is more structured. You typically pay a level, predictable premium for life, and the policy builds cash value over time, with the insurance company managing the underlying components. So, for many people, it feels more like a set it and forget it approach. Universal life, on the other hand, is more flexible. It separates the components so you can see what portion of your payment goes through the cost of insurance, what covers expenses, and what contributes to the cash value component. And in many cases, you also have some choice in how that value is allocated. Now, with that flexibility comes some important decisions, especially around how the cost of insurance is structured. One is a level cost of insurance, where the insurance cost stays stable over time. And the other one is the yearly or annual renewable term, where the cost of insurance starts lower but increases as you get older. And this part really matters because while lower cost early on can feel helpful, those increasing costs later in life can become significant and may impact how the policy performs over time, especially if it's not actively managed. So, when you're looking at permanent insurance, it's not just about choosing a type, it's about understanding how the structure fits your goals, your comfort level, and how involved you want to be over time. And here's what I want you to really take away from this because in real life, it's not often one or the other. A lot of people build their coverage in layers. For example, you might start with a term insurance to cover big responsibilities like your income and mortgage because it's more affordable right now. And then you might add a smaller amount of permanent coverage for longer term needs. That way, you're protecting your family today without stretching your budget while still building something that lasts longer. It doesn't have to be all or nothing, it just has to make sense for you. With insurance, you can also customize your coverage with options called riders, and a few important ones like waiver of premium allows you to keep the policy in force in the event that you get disabled and unable to pay the premiums, your policy still stays active. The second one is the children's coverage, which adds protection to your kids at a lower cost without them having to buy their own policy. Guaranteed insurability, it increases your coverage later on without new medical exams. So, these are especially valuable while you're still building your savings and stability. And one thing that I always remind people is that this is a contract. So it's important to be honest with your application because the insurer can review that information, especially in the first couple of years. And that's called the incontestability period. And for any policy, it only works if it stays in place. So choosing something that fits your budget in the long term really matters. So if you're thinking how much would the insurance cost me, you can start by getting a general idea online. You can also use my tool by going to app.marianagudo.com or scan the QR code on the screen. Or you can speak with a financial planner. You can also go to a licensed insurance broker like myself or just someone you trust. Just make sure that what you put in place actually fits your life. Because at the end of the day, it's not about what someone else has, it's not what your friend has. It's about what works for you, your family, and the life you're building here in Canada. Thank you for spending time with me. If this helped bring a little clarity, share it with someone who might need it too. And until next time, stay focused, stay clear, and keep making decisions that support the life you're building. Take care.